Kitco Mining's special coverage of the Mining Investment Event of the North is brought to you by EMX Royalty Corp.
Lithium prices jumped 10x at the beginning of this decade before crashing. So how do you even begin to finance this market? I'm with Rob Weir. He is corporate development at Lithium Royalty. Rob, welcome to Kitco.
Thanks for having us.
Talk about this lithium market right now. What's going on?
Well, as you alluded to, we had prices rise quite considerably a number of years ago. I think a lot of low-grade tons came into the market. We're in a surplus position, but with EV penetration continuing to grow, we think we're sort of towards the bottom of that period. Inventories have been depleted, and we think higher prices are coming at us down the road.
Explain Lithium Royalty. Is it kind of a standard vanilla like streaming and royalty type of business?
Yeah, we've tried to follow best practices from the leaders, and those are obviously Franco, Wheaton, and Osisko. We generally prefer hard rock assets and then gross overriding royalties. So we get a 1 to 3% of revenue, and there's no deductions for transportation, shipping, taxes. So in time, it could become a very profitable, high margin model.
Talk about the financing right now. What are you seeing outside of what you're providing for financing? Are lithium companies able to raise funds?
It's mostly coming from industry. Equity and debt are very hard to come by right now. They're either very dilutive or very expensive. So our capital can be very anti-dilutive. Atlas Lithium in Brazil is a good example. The CEO owned 45% of the company. We gave him $20 million US for a 3% GOR, and he's been able to bring in offtake partners and Mitsui as an equity and offtake partner to finance the project. So depends on the asset. Fortunately for us, a lot of our operators are still very well capitalized, so they can continue their development programs. But overall, it's been a pretty tight market.
Talk about lithium prices and like a red line right now for what price that you don't want to see go below for making sure that the industry is sustainable.
I think for hard rock, which is our specialization, anything below $1,500 makes it very difficult. You may even need prices as high as $2,000. So with demand continuing like it is, the inventory position gets narrow or tighter and tighter. So I think over $2,000 sustainably is what we need to rebuild the supply chain in North America.
Now, lithium's a little bit unusual because it's very much like a bulk commodity. I mean, it's when you're getting it out of the ground or hard rock miners or something like that, what they're actually shipping has got very low lithium content compared to other types of ores.
Yeah, it depends. It generally comes out as concentrate at 5.5% or 6% on the hard rock side. On the brines, it's different. Those are big evaporation ponds. Certainly in Quebec, there's Arcadium and Winsome. Patriot have talked a lot about capturing the full value chain and converting it to battery grade in the province. So all that's on the come, but I think that would be extremely positive for North America and our industry if they were able to pull it off.
Talk a little bit more about Downstream right now. I think we're coming up to the 2-year anniversary of the Inflation Reduction Act. We've seen a lot of investment announcements, whether that be with happening with Piedmont, for instance, what they're doing there. Is there some type of downstream chain for the processing of lithium, or is that being developed?
I think there's best intentions. I don't think we've seen a lot of tangible progress. I think the DOE loans are very complex and they're earmarked for very specific infrastructure. So at this point, I can't say we've got anything substantial. I think there's best intentions for it to happen down the road, but that remains to be seen.
How good is Canada's endowment for lithium?
I think they're very good. I think we need to have the willingness to invest and to permit, and in a timely fashion. Obviously, social license is very important. So it definitely takes longer here than it does in a jurisdiction like Brazil, but we're pretty optimistic that we'll get it right.
We're kind of the next frontier, aren't we? Because, I mean, Australia was fully developed, and you see a lot of like that Australian talent that's come to Canada because you see that this is kind of a, how would you say, there's an area for more exploration.
Yeah, Ken Brinson's probably the best example of that. He was at Pilbara. He's come over to run Patriot, and that's one of the, it's a world-class asset out of just one of their 20-odd-7 pegmatites. So there is a lot of Australian talent. They've been through this before. They have a very constructive view on the sector and prices over time. So they're guys you can definitely learn from.
There was some nationalization that happened 2 years ago. Thinking about what happened with Chile, I think the rule is that you have to have some type of a state majority control of your project, or at least for new projects. Of course, Mexico did its nationalization as well too. How are you modeling nationalization risk at Lithium Royalty?
Yeah, I think, to be frank, we model it by just taking it right out. We focused on Australia, Brazil, Canada, a little bit in Argentina. We've avoided Bolivia, Peru, Mexico, Africa, Russia, China. So we're pretty conservative in terms of our DNA. So we just avoid those geographies where we think those problems can arise.
Which are the companies that are actually going to build mines? What are some of the ingredients that are going to be successful? One thing I always try to understand, Rob, is that are these kind of, if you have success like advancing a silver mine, success developing a gold mine, are you also going to have equal success getting a lithium mine, a hard rock lithium mine up?
I think for sure. Agnico is probably the best example of that. They're fantastic mine builders. Pilbara have been very successful on the hard rock side in Australia. I think the companies like Patriot, which we don't have a royalty on, and Winsome are the two candidates in the province of Quebec that are most likely to get the job done.
Is there any technology that you're looking out that could have impact upon the lithium market? So you're focused on the hard rock, but in terms of what's happening with brines, in terms of what's happening with direct lithium extraction?
There's a lot of companies putting a lot of capital into that, including Exxon Mobil. We have not invested in any DLA-related assets. Each asset is very customized, so it takes a lot of engineering hours to unlock it. Every single project is discrete, so I guess we're of the view that it's not going to be broadly successful, but if anyone's going to figure it out, it's going to be a company the size of Exxon.
Lastly, what are some big milestones ahead in the industry? So looking out over the next 12 months, is there going to be any particular mine openings, affecting developments, or anything, or even anything that's happening downstream that you think is going to be meaningful in the lithium industry?
Yeah, there's a lot of organic expansions. Some of these world-class assets are still very economic today, so they're going to continue building their businesses. For us, we have 2 brines in Argentina operated by Zijin and Ganfeng. They're going to be in production this year. And then Atlas is going to be the second producer out of Minas Gerais, Brazil. And we have a 3% GOR, so we're excited about the progress all 3 of those assets have made.
Rob, thank you very much for your time.
Appreciate it.
My name is Michael McRae here at Mining Investment Conference in the North with Kitco Mining.
Kitco Mining special coverage of the Mining Investment Event of the North is brought to you by EMX Royalty Corp.